1, 2. Hi, everyone. So today I'm going to have a guest on, and he's a good friend of mine, and I've been aware of him in the Bitcoin community for a while, though we only really connected quite recently. And he's got a lot of knowledge that I wanted to share with you about how to, if you wanted to invest in Bitcoin, but do it in a more traditional way where you can make use of certain tax-free mechanisms that's offered by the Canadian government particularly. He's a Canadian, so that's his main area of expertise. He's been in Bitcoin since mid-2013, so this is his 8th year as a Bitcoiner. He has 2 degrees in business from York University's Schulich School of Business, one in finance and the other in marketing and strategy. He's worked for one of Canada's leading media companies, Torstar Corp, leading their investment and strategy functions from 2001 to 2005 as a managing director of the corporate development and building a digital portfolio of investments. He's done very well in the corporate world. It's something I know very little about, but he has his credentials make him understand things that I can't really explain to people. And there are ways in which you can use various schemes in Canada to your benefit, and there are now Bitcoin trusts that you can invest in and use your RRSPs and your TFSAs and things like that. So without further ado, I'm going to bring him on now. And there we go. How you doing, Tomer?
I'm doing good. I'm doing good. How about yourself?
Yeah, really good. Good to have you on. Thanks so much.
Great to be on here.
Yeah. So I've given you a friendly introduction already.
All right. I hope you did.
I forgot to mention that Tomer is also a moderator on the Bitcoin subreddit, and
here comes the hate mail.
Yeah, do you mind me saying your username on there?
Yeah, you might as well dox me. Go ahead.
Okay, I think you're called Logical, if that's right. That's your username.
That's right. Yeah.
Yeah. So, funnily enough, before I knew, I didn't know you were that person. I remember reading a lot of posts, and I've done a video on this channel already about the Bitcoin fork wars, and you were one of the major essayists that would just write pages and pages of information debunking these same old things that were thrown at us by big blockers and yeah.
Becoming a Bitcoin Reddit, becoming a Reddit/r/Bitcoin moderator was kind of an interesting experience. I never expected to be invited to be one, but I had written all those essays, and there was an expectation that there was going to be so much traffic once the fork wars were over that we would need more moderators. And as some of the viewers probably know, many of the opponents of Bitcoin were heavily critical of that form as overly moderated, which they referred to as censorship. The truth of the matter is, my activities are negligible. I don't think very many things get moderated or censored, depending on which term you want to use. Basically, there's no discussion of altcoins on there, and that's what people were mostly upset about. But 99% of the work is done by auto moderators. So it's more of a badge that I wear than an activity that I actually partake in to a great degree.
Yeah, that makes sense, because I never knew until yesterday that you were a moderator on that subreddit. And that also explains why they never invited me, because I'm sitting here all alone with watching posts get removed. Half the time I post something on the Bitcoin Reddit, it just gets removed. But
if you let me know, I can. One thing I can do is actually the opposite of censorship, which is make it easier for people to get approved. So
nice.
I can approve you. So I'd be very happy to do that in your case.
Oh, thank you.
Having vetted you personally.
Yeah, I hope I meet the whatever.
Yeah.
Anyway, I've said a little bit about what I wanted to get into already before I put you in. And yeah, it's the 2nd of January. Everyone maybe has tax in their mind right now, so it could be a particularly good time to help with this. I don't really understand much about it. And I guess let's start off with the TFSA and how that can be used and with QBTC as well, and there's
Yeah.
one other thing starting as well. So yeah, let's maybe jump.
Let's step back a little bit. So I think there's this is addressed not 99% to Canadians, although in many other tax regimes there's similar instruments and similar types of accounts. But I'm going to speak specifically to your Canadian audience today, and I think we'll talk about two types of accounts that the government allows you to invest in, where your savings grow tax-free, and in one case. In one case, they not only grow tax-free, but you can withdraw them tax-free. And in another case, when you withdraw them, you have to pay taxes on the withdrawal. But when you put funds into it, you actually get to deduct those funds from your tax. So we'll talk about both of those things. And we'll talk about what kind of instruments you can put in those things if you want to invest in Bitcoin. And so maybe the first thing to begin with is, if you want to, well, I think let's start with what you suggested. There's the first type of tax sheltered account that we'll talk about today is what's called a TFSA, which stands for tax-free savings account. And it's not really a savings account. It's an account that you can do whatever you want. So it can be an investment account as well. And you can set one up at any bank in Canada or any investment shop in Canada. And they just need your social insurance number. And every year, once you're past 18 years old as a Canadian citizen, you're allowed to put more money into a TFSA. And it does not expire if you fail to put money in 1 year. So if these accounts have been around now, I think for about 10 years or 11 years now that we're in January of 2021. And based off of how much you've been allowed to put into each one of them, by the end of December 2020, I think the grand total would have been 69,500 Canadian dollars. So if you don't have one of these TFSAs yet, and now it's actually 2021, I think you can put another 5,500 into it. So that would be $75,000 that you can invest. And the thing about whatever you put inside a TFSA, it can grow and grow and grow and grow. And when you take the money out of it, you pay no taxes. You pay no capital gains taxes. If there's income inside of it, you pay no income tax. So this is one of the very few tax shelters that exists in Canada for anybody. And you just have to be of a certain age and have a cost, and it's available.
Yeah. So it would be good to clarify, real rudimentary point here. You can't buy Bitcoin per se with this mechanism. You have to buy. It has to be financialized in some way, if that's the right word.
Yeah, the government's very flexible. Sorry, go ahead and finish your question.
Sure. I'm just making it clear to anyone watching that if you want to just buy Bitcoin and own it, as of yet, there's no way for you to do that without and be able to use this mechanism. To use this, you have to either buy shares in QBTC, which is a Bitcoin trust, who own Bitcoin in proportion to how many people are investing. I mean, I'm putting this badly, but the point
I'll explain it if you want.
The point I'm trying to make clear is that you can't own Bitcoin exactly in the most direct sense, though there are different levels of how paranoid you want to be about that, and we can get into that later. I just wanted to make that clear, and
So here's the only way you can own Bitcoin in this thing right now, which is, as you said, it's to hold some kind of trust product whose business is holding Bitcoin. I mean, you can own shares. There's a number of companies that are a good proxy for Bitcoin, so you can own shares of MicroStrategy.
Yes, we like MicroStrategy, and we'll come back to
I have some MicroStrategy in my RRSP, which is the other type of account that we'll talk about. But there's also two closed-end funds in Canada. I'll explain what that is. One is called QBTC, which is it's known as the Bitcoin Trust, and it's from the company called 3IQ. And the other one is called BTCG, which is a very new fund from CI Mutual Fund, which is another big Canadian fund company supported by Galaxy Holdings. But that one's brand new. That's only been out for a couple of weeks. QBTC, it's not exactly old. It's been around since April, but that has given it a fair bit of time. And the whole business of both of these funds is they hold Bitcoin, and that's all they do. And in being a closed fund, they hold a certain amount of Bitcoin, and then there's shares that trade in these funds that represent the Bitcoin, that a share of the Bitcoin that are in the custody of the custodians of these funds. So I think I'd have to check in a second, but I think like the Bitcoin Trust, the Bitcoin Fund, the one by 3iQ, about every 800 units, or almost every 1,000 units, about like 988 units, that's the number that's in my head, represent one Bitcoin. So if you go and you buy 988 Bitcoin, 988 units of this, you have a claim on one Bitcoin. And so they're roughly trading at about 40 US dollars or 50 Canadian dollars. You can buy them in Canadian or US dollars. You trade under both symbols. And you can put those in your TFSA. And if you do put them in your TFSA and their value grows, then when it comes time to harvest them, you can declare all those gains to the Canada Revenue Agency, and you don't have to pay any tax on them. So if Bitcoin does 10x, and you put in $50, you're going to get out $500, and you're not going to have any taxable event at all. And
Right.
That's kind of that's one of the great advantages of this. And we should probably at the end of this description of what the two types of accounts that you can put money in, I think we can talk about the pros and cons and the differences of holding Bitcoin in your own self-custody versus having somebody else custody, having one of these companies custody these coins for you.
Yeah.
But
I think I would like to get into.
Really talk.
I have another couple of things I'd like to ask you before we talk about that.
Sure.
I guess, what would you say to someone that is too worried about having their Bitcoin with an institution rather than under their own control? What would you say to that concern?
I think that this is something that is maybe a very valid concern for that particular individual. I don't think that there's a very high risk of the government seizing the coins, or the coins getting stolen, or the company stealing these coins from you. This is where the regulations actually work in people's favor. And I'm by no means suggesting that this is a better alternative for someone who wants to hold their own coin. But I think that there are a lot of people out there who want to invest in Bitcoin and who do find it complicated to buy Bitcoin, to custody Bitcoin. I can say, I don't want to make an ageist claim on this, but I think the less of your life you've lived in a technical environment, or the less technical you feel, the safer you might feel by saying, there's somebody who's regulated, who's professional at custodying coins, and my coins are held with that individual, and I have a legal stake to a claim on those, a legal claim to a stake on those coins. There may be some people who feel more comfort in that. And I think that that's really, at the end of the day, the big distinction between one way or another of self-custodying your coins and taking the responsibility to know how to custody them, to not have them stolen from you, and to not lose them yourself, versus put them in one of these instruments where you pay a fee. There's just under a 2% management fee with both of these funds. There's 1.95% with QBTC and 1.8% with the CI Galaxy Fund. And so you're paying them a management fee to take that worry off your hands. And
so there's a yearly fee associated with.
Yeah, there's a yearly amount, and they deduct 1/365th of it every day off of the.
Okay.
So every day it's a tiny little sliver of Bitcoin gets shaved off of each unit. Although I will say this an important thing that distinguishes the two, given how long they've been around. QBT, so these are called closed-end funds, and they theoretically have a fixed number of units and a fixed number of assets that they manage. But there are opportunities to open these closed funds from time to time. QBTC has had, I think, 3 openings so far, where they do in a single day an opening, and they take in more funds, so the number of dollars that they get in grows, and they use those dollars exclusively to buy Bitcoin. And sometimes there's a small dilution, like if they end up having to pay, if Bitcoin's on the run up after they've taken their money in but locked the price, they don't manage to buy them. But having said that, most of the time it's actually been accretive. So instead of the amount of Bitcoin that you have shrinking, the Bitcoin that you have actually increased. It's a small amount, so I don't want people to think, oh, I'm going to buy 1 Bitcoin and end up with 1.1 Bitcoin at the end of the year. But listen, if it offsets the fees and you buy one
Sure.
Bitcoin and someone does all the work of holding it for you, and then you still have one Bitcoin at the end of the year without having to pay the 2% fee, that's not bad. The other way that QBTC is allowed to open their fund is with private placements where accredited investors are allowed to buy units in the fund. And occasionally, again, when those people buy those units, they have to pay a small premium. And that premium gets shared with all the other unit holders rather than becomes a fee to the fund or a portion.
Okay.
And so, yeah.
Yeah. Sorry to cut you there. I wanted to ask you about the funding rounds as well. And if you could explain how that works, that would be awesome too.
So you mean like these being the private placements?
Yeah.
Okay, so these are not accessible to anyone and everyone, and they're only accessible in limited supply.
Mm-hmm.
So
I believe the funding round is that only GBTC refers to it as that, and QBTC calls it what you just said.
Oh yeah, yeah, exactly. Yeah. So what? Let me just back up a little bit before we even talk about why you would want to participate in a private version of the expansion of the fund. Because the funds are closed and they have a certain amount of Bitcoin, and there's lots of people who want to buy units in the fund for the tax advantages of them, they tend to trade at a higher value than their net asset value. So the net asset value is how many units there are, or how many Bitcoin they hold divided by how many units there are, right? And so if they had one Bitcoin and one unit, each unit would have a net asset value of whatever the price of Bitcoin is. Mm-hmm. But it turns out because demand exceeds supply, these things trade at a premium to their net asset value, and they trade in a range that can be quite significant. At the extremes, they'll sometimes trade at no premium, even occasionally, although very, very rarely, a small discount. But you know what happens if Bitcoin is sold at a discount, right? The price will get up very quickly. But and sometimes as high as a premium as close to 30%. But most of the time they'll trade at a premium between 7 and 15%.
And so would that mean that if you own some Bitcoin and it's in if it's in QBTC and you sell it there and the premium is at 30%, then you're selling your Bitcoin for 30% more than the market price.
That's right. But when you buy in, you're also buying it at 30% more. So if the premiums were flat the whole time, this would really be a bit of a non-issue, right? You'd say, you're buying in, there's a 20% premium, but when you're selling that there's a 20% premium. But the fact is, this is another variable, and it's a risk. If you buy in when the premium is high, and for whatever reason you need to sell at a moment when the premium is low, you're actually going to lose, you're going to lose the premium that you paid, which could be as high as 20%. Again, because it's typically, go from 15 to 10 to 15 to 9 to 14. There's maybe a 5% swing here that really matters. But so I wouldn't want to discourage people from buying on the basis that there is a premium there. But there could be events that would cause the premium to disappear over time.
Like an ETF, right?
Yeah, if an ETF was launched, an ETF is really a fund that's designed to trade at exactly the price and be of unlimited supply. And so when and if an ETF is created, you can expect that there will be compression of the premium on both the QBTC and the BTC fund, as well as the very famous Grayscale Trust that's out of the United States, which is a very similar instrument. And again, we can compare a bunch of the nuances and the differences between these things later on. Maybe even before we go into describing how to do the private investment in these, because it may not be accessible to most of your audience, we can talk a little bit about the RSP, which is the other type of fund, and then we can talk about the other type of account that you can put BTC in.
Okay, yeah, let's go into RRSPs.
Yeah, so, and again, if people don't yet know what RRSPs are, and have been working in Canada for a period of time, this is perhaps the best tax-efficient vehicle in Canada. Every year you tell the government how much you earned, and they give you an opportunity to take a percentage of that and invest it for your retirement. And if you do invest it for your retirement in this registered retirement savings plan, which is now often referred to as a retirement savings plan, then they will consider all that money that you put in the RSP to not have been income. And so they will reduce the income on which you need to pay taxes by the amount of money that you put into the RSP. So if you're in one of those income tax brackets where you're paying 40 or 50% of your income is taxes, and you're allowed to put up to $19,000 in many cases into the RSP, and you do that, then your taxes go down by 40 or 50% of $19,000. And one way to look at it is the government's giving you. Usually, people have their taxes deducted at source, but it's like the government's giving you back money to invest. And so I can think of nothing more exciting as a Bitcoin lover than the government is paying me 50%, is co-investing with me in buying Bitcoin, and they're letting me keep all the investment. Right? I mean,
that's incredible.
Yeah. Well, I mean, let's not forget how this game really works. Is you earned the money and then they took it, and then you did something and they gave some of it back. But given that if you accept the
other option is they don't give you anything back, right?
Yeah, the other option is they don't give you anything back. So this is a chance to get some of your money back. And again, in an RSP, like a TFSA, it's an investment account. You can hold just about any kind of investment vehicle in it. And so these Bitcoin fund, these Bitcoin following funds are very useful things to put in there. The trick with the RSP, and maybe not so much a trick, but just the reality of it is when it comes time to retire, you have to take your money out of it. And when you're taking your money out of it, that money that you take out of it counts as income and must be reported as income, and taxes must be paid on. So if you're 40 years old right now, and at 55 you plan to retire, and you've got some QBTC in there, when the time comes, you don't have to withdraw it all at once. You can withdraw it over the course of your life, and you don't have to withdraw it when you turn 55. They force you to start withdrawing it when you turn 71 years old, so because they want to get their taxes at some point. Is
there an amount you can withdraw every year that doesn't incur anything, or you're going to get hit
if you're withdrawing an amount that's lower than the amount at which income taxes are arreared, there's a certain threshold. It's a low threshold. I don't know exactly what it is. But
understood.
Yeah, if you're only making a few $1,000s, you can take it out. But what it allows you to do, which is very, very effective, is to, while you're making a lot of money and paying a lot of income tax, put that money away and get those taxes deducted. And then later on in life, when you're not earning a lot of money, take that money back at a lower tax rate and have had it grow tax-free all this time. So the other things you can do in all of these accounts is you can trade as much as you want without ever having to declare a capital gain or pay capital gain tax, or without ever having to pay an income tax on any income that takes place in there. So you can at some point, if you wanted to, sell your BTC denominated funds and buy something else, you can switch. If you're rational, you want to switch back to Bitcoin and other Bitcoin copying funds.
I got a super naive question. Is there any way to transfer anything you hold in one of these accounts, the TFSA or the RRSP, to someone else without selling it and then giving them the Canadian dollars, having them buy it? Is there some way to transfer ownership? And
there is.
There is. Can you avoid?
There is a way to do it with avoiding taxing, but it's not pleasant. You have to die.
Okay. You have to what?
You have to die.
Oh my God! Right.
So the thing is fixed to you. I mean, you can have someone named in your will, and then you can transfer these things to them upon your death.
Canada doesn't have a death tax then? That surprises me.
I don't know exactly all the tax treatments upon death of these things. I think in the case of spousal accounts with respect to some of these things, they just continue to exist the way they did before until your spouse does something with them. So I don't think your spouse can eventually take the money out without ever having to pay tax. But if you had this money saved for your retirement and you unfortunately passed and they were your heir, they wouldn't be forced to sell it all and pay tax on it. The thing would transfer into their name. And
something I hadn't thought of before is the fact that when you die, making a contingency plan for your Bitcoin, if it's owned in the kosher way, where you're in control of your private key, is actually pretty complicated to. Yeah. It's hard enough teaching people how to keep their private keys secure and not so secure that they lock themselves out of their own Bitcoin. Mm-hmm. And I'm not advocating for a minute that anyone should shy away from this, because it is the proper way to use Bitcoin. But if you have more faith in the structure of society remaining relatively free than I do, and you're interested in these vehicles, that would solve a big problem there, which is how do you pass your Bitcoin down if the worst happens, or when the worst happens? And yeah, when they're wrapped up in these instruments like this, it becomes just like everything else, like passing on standard stocks and shares or anything else, if I'm not mistaken.
Yes, they're exactly treated. The QBTC, the government doesn't view QBTC as something related to Bitcoin. That's QBTC's business. They view QBTC as a closed-end fund trading on the Toronto Stock Exchange.
Hmm.
So that's all there is to it.
How much faith would you put in QBTC with regard to their reserves and the scrutiny they face from the regulatory bodies in Canada?
I think I would say that it's kind of the gold standard right now. So the reserves are audited, I believe, every day, or the reserve. They don't hold the coins themselves. The Gemini business, it's owned by custody business. It's owned by the Winklevoss brothers. Is the custodian and the custody, and there's an auditing firm that's also a third party that audits it regularly. They update their website every single day with how many Bitcoin per unit exist. And at most that's ever out of date by a couple of days, but those are just coins held by a custodian in cold storage.
And how does that compare to what your standard exchange does? You know, like, well, not Quadriga, but
I think no one has any clue what any standard exchange's reserves are, right? Like there's no way to know that Coinbase has however many coins they may have. Like Coinbase doesn't claim how many coins they have, and they don't prove how many coins they have.
Yeah,
and Coinbase isn't unique.
And I don't think ShakePay do either, or any of the exchanges can, or Bitcoin.
I'm not aware of any exchange who has the reserves audited or declared. But I will say both of these funds, the reserves are declared and audited by a third party. You can't audit them yourself. Like I'm not familiar with what their addresses are, and they haven't signed a message to me saying this is our address. But they're audited regularly, and I think in that respect, they're very reliable. And I think again, it's also the terms under which they do business make it very hard for anyone who works for them or anyone who's affiliated with them to do anything to make any of those coins disappear. So I think that this is, I like these. If you're going to do something with your Bitcoin, other than self-custody it, I like this a lot more than putting my Bitcoin into some exchange or some custodian who then lends it out or might have some only fractional reserves, who might sell coins that they don't have. I think this is a very respectable way to hold Bitcoin, and you know that it's there. I will say this is another interesting feature that's true only of QBTC. In the event, so they do have their custody, but there's also a clause in there that allows you to redeem your units, which means you can, if you own like 886 units or however many are equivalent to Bitcoin, you can go to, and you don't have to own that many, of course, you can own even just one, but you can say to the fund, I don't want to sell this, I want to redeem it. And I want you to sell the Bitcoin that you have and give me the cash. And there's also a clause in the prospectus that says if there's no bid for the asset, then they have to redeem it in specie, which means in Bitcoin. And so if we reach a day where nobody wants to pay anything for Bitcoin, right? Bitcoin goes to zero, you can still ask for your Bitcoins out of the unit instead of $0. And if there's no bid the other way around, if the dollar goes to zero, you can ask for your Bitcoin out of the fund, right? So that to me is a really nice clause, very unlikely to get exercised in any short period of time.
Yeah, but it's where you want
anybody.
That's exactly where I'd want the very end points of the extremes. That's exactly how I'm thinking.
So I think that that's a really interesting thing about these. The other thing we were going to talk about was the opportunity to invest in the private placements of the QBTC fund.
Yeah.
This is just called a private placement in Canada. In the United States, it's called a PIPE, which is a private investment in the public equity. I think that's what it stands for. And but they're essentially the same thing. This is when closed funds create new units for investors, and then those investors are restricted and they can't sell those units. They're not equivalent units in terms of their liquidity. And in the Canadian fund, in order to participate, you need to be an accredited investor, which means that you need to satisfy certain requirements of having a certain amount of wealth in different ways, whether it's your income or your liquid assets or your total assets. You must qualify for that, and then you can file through your broker to participate in a private placement on QBTC. And if you do that, you do get the units at close to their net asset value. You get them at, depends about 2.5% above their net asset value. So you're only paying a very small premium, but you're also not allowed to sell them right away. You have to hold them for a minimum period. They're frozen, and you have to hold them for at least 4 months and a day, I believe is what it is with QBTC. The other fund that hasn't yet started offering anything.
Yeah, when we first spoke about that, we did that off the back of a discussion about these lending platforms that you already alluded to a few minutes ago, where you can put your Bitcoin in a platform that will lend them to other people and pay you an interest rate for them. So essentially just like putting money in a bank and having the bank do stuff with it and then giving you some interest. But these platforms with Bitcoin tend to give you a much higher interest rate, but they don't have any of the same or enjoy any of the same accountability that QBTC do. And from how you broke it down to me previously when we spoke, you said that instead of putting money in a platform like BlockFi or Ledn that will give you an interest rate, you can instead just use that money to take part in one of these private funding rounds. You might not be able to because you might not be an accredited investor, but I think that's a good faith thing. You can say, I own lots of money and no one's really going to check. And I don't know how, I don't want to get into too murky territory here, but yeah.
Well, I certainly would. Yeah, I certainly on a podcast or a YouTube video wouldn't suggest that anyone who's not an accredited investor claim to be one.
Yeah.
There are risks, of course, right? And when you participate in any kind of private placement, including the one with QBTC, you do have to declare that you understand that you could lose all your money, that it may not be liquid, that you're not allowed. So there's a lot of things that you have to make sure of. But if you do participate in a private placement, then you do get these units, which become liquid after 4 months in a day, and you get them at close to the net asset value, which does mean that if 4 months in a day after you bought them, if there's a very high premium, you could consider selling them and taking the funds. You take the funds and do whatever you want with them, but one thing you can do with the funds is participate in another private placement. And I think this is something that, again, this is very small and very new in Canada. But I think when people talk about GBTC, the Grayscale Bitcoin Trust in the United States, and its management of $13 billion, there's $13 billion the last time I checked, but Bitcoin's up 30% since the last time
probably 20 now.
Yeah. So they've got well over $10 billion worth of assets under management, and this is a big thing that happens in the Grayscale Bitcoin Trust is people put in actual Bitcoins and get units and ultimately sell them at the premium 6 months later, or they put in cash. GBTC buys the Bitcoin and then they sell them later. And these premiums have remained relatively high for quite a long period of time. Well in the range of 20% and sometimes substantially higher on GBTC. And QBTC does allow you to do the same thing. QBTC is limited as to how much of this they can do in a month. The last time I heard, I believe they were only allowed to issue $25 million a month worth of private placements. So again, if you're an accredited investor and you want to participate in this thing, you may end up having to wait until a month rolls over. You may not be able to get in on the offering. So I guess maybe one of the things we can do after this is I can give people a way to reach me, and if they want an introduction to a broker or someone who may be more acquainted with that, I'd be happy to help some people up to a point.
Yeah,
and
that'd be great.
And they could see if they could participate, if they qualify, and if they want to participate in becoming an accredited investor for these funds.
And did you mention, or I'm not sure if you mentioned something you told me before, which is the requirement is $100,000 to be part of one of those, but you can potentially combine with other people to pool your money together.
So QBTC won't do a private placement issuance unless they have at least $100,000 worth to do, because they have to go to the market. They have fees and expenses, and they don't want to go and buy half a Bitcoin.
US dollars or Canadian dollars?
It's US dollars that it needs to be. So of course, if you're only buying into your TFSA, even if your TFSA is empty, you're the only one, that's 75,000 Canadian dollars. That's not even enough to allocate. But as long as they have more than that coming kind of from one broker in a given day, they will issue new units under a private placement. So it's worthwhile pooling, and you may have to wait a little bit. This is why it's participating in a private placement is very different than buying a stock on the stock market and being able to sell it 1 second later. Right? You can't just do, it only happens at the end of the business day. It gets priced at the price of Bitcoin at the close of market. Then they go out and they buy the Bitcoin, then they issue you these units, and you have to hold on, and it takes 2 days to settle, and then you have to do it 4 months later. So it's not trivial, and it's not, and it really is. You must be. This is why we say you must be an accredited investor, because you're taking on certain limitations and restrictions and risks that people who are just buying units, openly free trading units on the market, aren't taking those risks.
So if you did do this and the price of Bitcoin went down in those 4 months and a day, would you be in a worse spot than you would have been if you just bought Bitcoin proper and it had gone down as well and you'd held for the same amount of time?
I think you'd be in the same position if the premium were the same, right? If you did this and the premium went, if you participate in a private placement and the premium compressed to nothing, you'd be essentially in the same, or 2.5%, you'd be essentially in the same place as anyone who held it.
Are you still paying that? Are you still paying that daily 165th?
Yeah. So
period.
Yeah. So in 4 months and a day, which is just over a third of the year, you'd have paid 1/3 of 2%. So there would have been that diminution. But if the price of Bitcoin went down, let's say you bought the private placement, you paid a 2.5% premium to get it. It was roughly a 1% fee. So you're now 3.5% of your Bitcoins disappeared in fees and brokerage things. And the price of Bitcoin's done nothing. The premiums of 10% the day that they become tradable, you still would have made 6.5% in 4 months if you were to sell the units. And that's what you'd make in BlockFi in a year.
Right.
So it is an attractive way. And your coins weren't lent out to somebody who shorted them. Your coins were held in custody.
Yeah, that's another thing. Like, there's some theories out there that when you put your Bitcoin on these lending platforms, the people that are doing the borrowing are always doing it to either gamble on shit coins or to short, or maybe they're using it to long as well. But I don't know.
If they're borrowing it, they have to return it. So they're looking to get a gain on it somehow. And I think there's two things they can be doing. One is they can be speculating that something else will go up faster. If it's the dollar, it means they're shorting the Bitcoin. If it's some altcoin, it means they're shorting Bitcoin and longing the altcoin. But perhaps one thing that many of these people are doing is giving that coin that they borrowed to GBTC in a private investment in public equity, and hoping to sell it 6 months later at a 20 to 30% premium and pay BlockFi only 6%.
I bet there's a lot of that going on, actually. I'd never thought of that.
So it's kind of like this endless spiral of someone borrows a Bitcoin from somebody who's earning 6% on by lending it to BlockFi. That person who borrowed it from BlockFi then has to pay them, I don't know exactly what the rate is, but let's say it's 10%. They invest it with GBTC, and 6 months later, when they've only paid 5% in essence, that only half of the year's interest, they sell their GBTC unit at a 20 to 30% premium, and that's their arbitrage, and then BlockFi pays you. And I don't know, maybe BlockFi themselves are even participating in this to some degree. So this is really an interesting thing with all the financing of Bitcoin, but I'm not an expert, and I'm not an insider, so I have no idea whether these things are actually taking place.
Yeah, but you know more than me, which is why you're here right now.
I think I can speak with clarity around these Canadian. Again, I'm not a Canadian tax expert either, but I'm very familiar, and these are very familiar products. The TFSA and the RRSP are well established.
I should mention that what we're doing here is not giving anyone financial advice or tax advice. Tomer is merely explaining a mechanism whereby you can be tax efficient, and you can get some exposure to Bitcoin, but without and maybe save yourself a bit of tax as well. But please check everything. Please verify everything. please leave us alone. You know.
Don't trust us. Verify what verify what you've heard. It's. I mean, I think what I can do is give you a couple of links to the pages of these funds and maybe some other things that you can share on this video. And but by all means, people should check with their accountants or with their financial advisors exactly how to do these things and the availability of them. But and we'll put up the stock symbols so that you can see them on the Toronto Stock Exchange trade. I guess from
Would you ever recommend that anyone abandoned self-custody and went all in on these funds instead, just due to the advantages they provide?
No. I think I was going to talk next about what are the differences between self-custody and these things. And we kind of scratched the surface, but if you really want to know, but when you have Bitcoin and it's in your self-custody, you have a responsibility to not lose it, right? To not misplace the keys and then the coins are lost forever, to not place the key somewhere somebody else finds it and steals your coin. But you also have a lot of optional things that you can do with it. I mean, at a moment's notice, you can send it halfway around the world to somebody for whatever reason. You want to buy something or you want to help somebody out. You can also use it to fund a Lightning Network node and have channels in the Lightning Network and be able to send and receive instant payments, instant payments for practically no fee. These are things you can do by owning Bitcoin and having it within your own custody. When you own a unit in a mutual fund that has all those coins in cold storage, you can't do any of those things. So it's very different in that respect, right? You're looking at it as an investment when you're putting it in these. I think when you hold Bitcoin directly, of course it's an investment, but it's so much more. You're holding self-sovereign money, you're holding stateless money, you're holding something that's outside the influence or the authority of anybody, right? Bitcoin has its own rules, and nobody can break those rules. Nobody anywhere in the world can break those rules. So when you're self-custodying coins, you're participating in that system. And you're not participating in that system in the exact same, you're only participating in that system as an investment relative to dollars when you're holding fund units in these funds. I will again then bring up though, but should some kind of apocalypse happen one way or the other, I think QBTC has a really nice legal clause, which again can only be enforced through the courts and the legal system, right? Everything on Bitcoin can be enforced through math and physics. So you have to rely on the existence of these other things to be there for you. So it's not exactly the same. I would still though, like what's my I'm not going to give advice to anybody. I'll tell you what I personally did. I personally have, throughout my whole career, taken as much advantage of the RRSP as I can, because every dollar I put in my RRSP, I get about 50 cents back from the government. And so I can either look at it exactly that way, or I can say every dollar I put in there, they put in half of it. And so investing at a 50% discount is a no-brainer. And you just keep on doing, you should max out your RSP, especially now, if as a Bitcoin lover, you want to have Bitcoin and you're torn between, well, should I buy Bitcoin in self-custody or should I put money in my RSP and invest it in some stock? Well, now you've got a bit of a hybrid that's not necessarily the best of both worlds, but it's the investment value of Bitcoin with the tax efficiency of the RSP. And the same thing, ultimately, if you're residing in Canada, if you are going to sell your Bitcoin rather than spend it at some point in your life, you will have to declare capital gains on it. And so if it sits in your TFSA, you will not have to declare capital gain. You will not have to pay a capital gains tax on it. So I think people should have as much Bitcoin as they feel is sensible for them. And it's not a bad idea to have a little bit of all of these things. Like if you put into your RSP, you're going to end up with more Bitcoin than you would have otherwise because the government's giving you a boost on it, right? Or you'll end up with money to spend on other things while you load up on Bitcoin. In the TFSA, you'll end up being able to get more dollar purchasing power with your Bitcoin after it appreciates in value, assuming it appreciates.
So yeah, this is a fascinating mechanism, and I got to say, for people like me that have never really been in, like I'm a musician, most of the people I deal with as well are not they are not aware of any of the things that work in traditional finance like this. They've never bought a stock or a share. They just they got some Bitcoin for whatever reason. They wanted to buy some drugs like 8 years ago or something like that. Whatever got you into it, and like and that doesn't translate to knowing anything about traditional finance like you're explaining here. How much of a learning curve is it to? I don't have like I can ask on behalf of everyone else that's scratching their heads right now. All I have is a bog standard bank account with a debit card. You know, that's it. I got a credit card. I never use it. And how much of a run us through some of the process and how alienating it is. Like, I mean, I'm telling people how to set up full nodes, which is difficult and alienating, right? But this is more difficult for me. Like the idea of the BO, you know.
Yeah, this is there's a different experience. You're not going to sit in front of a computer and do this. You're going to go into a bank branch or phone somebody at a bank, and you're going to tell them if you want to set up an investment account. And every bank in Canada, and you don't have to do this with the bank, but every bank in Canada has a brokerage arm, and so they'll send you forms to fill out, and you'll enter your
anything but forms.
I know it feels easier.
Forms, man.
I'll set up some sophisticated encryption-based server with onion routing, but oh my God, don't make me fill out a form. But you will have to fill out forms, and they'll open up an account for you in your name. And if you have money in that bank, for example, and that you want to transfer, they'll make it easy. They'll set you up with online banking, and so at that point you don't have to fill out forms. You can transfer your money from your savings or checking account into your investment account. And then you click on the investment tab on the bank site, and you can then go and buy whatever you want with in the stock market with those funds. And if you type in QBTC or QBTC.U, which is a US dollar denominated unit, you'll see the current price, and it'll tell you how many you can buy, and you can just buy them at market. So that's like, it's really not that hard. I do often feel when I go into a bank nowadays and I'm familiar with Bitcoin, it's like, oh my God, this is so inefficient. There's people, there's buildings, there's forms, everything needs to be checked by a manager. Why can't I just show up and sign something with my private key and it's all said and done? But this is the old system, and it still works. It's a very different paradigm than the Bitcoin system.
Yeah, I'm gonna put it like. If you could send a letter instead of an email, and it's really annoying, and you live miles away from like a long drive from the post office, but there was some huge tax advantage to doing it, maybe you'd consider it.
Yeah, I think that's fair. I think that's really fair, and that's why I'd say, kind of just to wrap up the insights around this, it's a different way of holding your instrument. It's one where you're taking advantage, not in any illegal way, in exactly the way that it's intended, that the government has created these types of instruments to encourage you to invest, to encourage you to save for your retirement. And there's incentives for it that the government gives you. And so you're using the incentives that the government is giving you.
Yeah.
Which you really ought to.
How, I wanted to ask something about the age of the TFSA. You said, what age is it where... If you're 28 or something, then you have 75,000 now available to you to just invest completely tax-free in anything, and and it's like no ifs, no buts, right? You invest 75,000, it can go up to $1 billion next week. You sell it all, no tax. And is that right? My understanding?
That's right. Yep, that's correct. That's my understanding too. Again, I'm not a financial advisor. I just play one on YouTube, but that's my understanding as well, and you can confirm it with your accountant if you want to, but that is my understanding of how TFSAs work. They're limited, right? They only give you. It's been 10 years, and that's why you've got this $75,000. It looks like 12 years or something. It looks like so much, but it's only like $5,500 a year. So, it's not like if you're a multimillionaire, you don't get this big tax advantage. Right? You have to pay tax on all your multi-millions of dollars except for $5,500. And if you only make $5,500 a year, you get the same allotment. So it's a very egalitarian and relatively small system, right? Like, a Bitcoin today is trading at over 40,000 Canadian dollars. You need like 8 years worth of TFSA contributions to buy one Bitcoin. So it's not going to solve all your problems. This advice may be too little, too late, but who knows?
I mean, Bitcoin is what it is, but we know that the $40,000 mark is the arbitrary Bitcoin amount. We know it's early Satoshis, right? At this point, and that's an 100 millionth of a Bitcoin for anyone that doesn't know. That's you don't. I mean, I don't know if I've even mentioned this before, but it's such a such an overly memed reality in Bitcoin is that you don't need to buy a whole Bitcoin. You can buy half, you can buy a quarter, you can buy 100 millionth of it. And whether it's $40,000.
So I'd say with these units, with these things, you can, because you have to buy the units as a whole. So you can buy, I double check it. You can buy up to like 1/988th of a Bitcoin, like 1/1000th of a Bitcoin, roughly through these units. And so
that's about 40
you can buy one of these. Exactly. Now with the premium, you're going to pay somewhere around $45 to $50. But when the time comes to sell it, hopefully you'll be able to get the same premium out of it. And again, given that you don't have to pay any tax on it, if you're actually going to sell the thing, it's better to sell it and not. It's better to have paid a 5% premium and watch it grow 100% than it is to have bought it at cost and then pay 25% tax on your 100% growth as a capital gain. So these are just really efficient ways to participate in the price changes of Bitcoin.
Yeah, for sure. I think that about covers everything. I had a lot more questions, but they've come and gone from my head, sadly.
Okay. I do think we've covered everything, right? Where you can put these units, the distinction between these things and holding real Bitcoin, the trade-offs, both positive and negative of each of these things, and why you might want to do it and why you might want to not do it.
Again, I guess I would just there are a lot of people that are interested in Bitcoin because they just don't trust anything out like that touches the government or the traditional financial institutions, and it's quite an ironic thing to get involved in because these are banks, right? And the CI Galaxy holding one, is that out yet, or is that still yet?
It exists. It's only existed for a couple of weeks now, but its units are doing well. They're trading at a very similar premium over net asset value to QBTC. It's a much smaller fund, QBTC, because they've been around longer and have had these openings. I think they're, again, before the weekend, they were managing $600 million. Bitcoin's up 15%.
Yeah, it's
or something. So they're managing even more. And the BTCG one was opened at about $70 million of assets under management. And again, Bitcoin's gone up in the last few weeks, so they're probably over $100 million worth of assets under management. So neither of these things is puny. But neither of them are billion-dollar managers yet. Although I'm sure QBTC will be managing $1 billion pretty soon.
Do you think if someone's going for a buy the dip strategy when they're investing in Bitcoin and they want to do it this way instead, that dips can be sort of exaggerated with the negative premiums?
Yeah. So there is a strategy here, which again, someone can try to do. I'm not recommending it. I'm not recommending it. This is, again, not financial advice. But the premium does fluctuate, and if imagine the price of Bitcoin was flat, but the premium fluctuated from 0 to 20%. Well, and you knew that 20% was kind of the peak. So anytime the price was 20%, you'd sell units. You'd even short them if you could. I don't think it's easy to short units in this thing, but you'd sell them, and then you'd wait for the price to come down, the premium to come down, and then you'd buy them when the premium was like 5 or 7%, and you just buy at 7, sell it close to 20, and keep doing that. The thing with Bitcoin is the price has been going up a lot lately, and so when you sell, the price may go up to eliminate any advantage you have from buying when the premium comes down.
Right.
I personally don't play that game of trying to find dips, buy dips, time the market. Sometimes I'll wake up and Bitcoin will have crashed in price or something, and then I will so it's not an active strategy, but I'll panic to find some money together and say, let me buy some more Bitcoin because it feels like a really special opportunity. But I tend to buy just as much on the way up when I do have like when I get an RSP opportunity to put money in, I don't try to time it. I go, and buying Bitcoin at any price has turned out to be a good bet. Here we sit today on a day when Bitcoin's up more than 10% in a single day. If you bought yesterday, you're up in a single day more than you'd have made for 10 years of putting your money in GICs. Guaranteed investment certificates. So
yeah, it's doing.
That's the way. That's just my thinking on it.
Yeah. Well, this is some really, really interesting information. And I think there's every reason to do something like this. And it's, I mean, because as long as taxes are real and as long as they're a thing you're going to have to pay and you're not going to exist completely off grid, where you've bought all your Bitcoin without any KYC or anything like that, as long as you're plugged into the system somewhat and you're still going to need to pay tax, I don't see why you wouldn't go for this. I haven't yet myself, but you know my life at the moment. I just have no time whatsoever. But the minute I have some, I think I'll definitely go for something like this.
Yeah. So maybe the last thing that I'll say is for people who like yourself feel comfortable doing one thing, and this is the new world for them, and so you tend to psychologically postpone doing this because it's uncomfortable. Give it a shot, right? Like I'm not saying necessarily buy it, but walk into a bank and set up an account, a trading account. And
that reminds me of another question I had actually. Yeah. Whenever I get people signed up on particularly ShakePay, but to be honest, I've had this with every Bitcoin exchange. Whenever anyone signs up and makes an account on these Bitcoin exchanges and then does a bank transfer, whether it's an e-transfer or a wire, the bank normally freaks out and gives them a phone call and says, someone's trying to commit fraud on your account, obviously, because they're trying to buy Bitcoin. So that's obviously fraud. This happens like reliably to every person I sign up to ShakePay. And it's a little ironic, but rather than just sort of comment on the irony of it, if you do open one of these accounts, and is it one of these things where the system isn't monolithic, where you can open a TFSA and you can invest in QBTC and your bank's fine with it, but some other part of your bank freaks out and goes, you're using Bitcoin, we're going to shut down your account? Or
no, because the banks, you're not buying Bitcoin at all as far as the Canadian financial infrastructure is concerned. You're buying units of a Toronto Stock Exchange traded fund. So they're not going to get any more upset when you buy QBTC than if you buy Tesla or if you buy the shares in the bank itself.
Right.
That's all that you're doing. You're not actually, and this is really important, you're not actually buying Bitcoin. QBTC is buying Bitcoin. Mm-hmm. BTCG is buying Bitcoin, and they have regulatory approval to do that, and they have to meet the custodial standards and the
and that
auditing standards.
That makes sense. And that reminds me of another question I had, which is slipping from my mind as we speak. Nope, it's gone. It's totally gone. I was going to say GBTC, which is the American one we've mentioned a bunch of times. They offer some of the altcoins now, I think. I think they do Ethereum, and I don't know if they do Doge or whatever silliness. That's
I don't know. I know which ones they offer, and I don't even want to say their names.
Fair enough. That sucks. And because people like me and Tomer spend so much time, it's the most annoying part of being a Bitcoiner is having to deal with people who have misguided enthusiasm about projects that look the same, but offer none of the benefits of Bitcoin. Do either of these Canadian ones, are they lending any legitimacy to these projects by listing them, or are they pure Bitcoin?
So the Galaxy one is brand new and it's only Bitcoin. QBTC has been only BTC for a while, but they did recently launch an Ethereum.
Oh man, we hate to see it. We hate to see it.
There's demand for these products out there, and all we can do is try to inform people that.
Hey, is it technically DeFi? I mean, it's probably more.
It's probably less. It's probably more decentralized than most DeFi, but it's completely centralized, which is it's just open about it. Right? You're giving all your money to one entity, and they are buying this thing, and they're holding on to it for you.
It's just then my mind is just blown by the fact that we have. I mean, it shouldn't be really. Like, people go to casinos, right? And, they're guaranteed to lose money or get lucky, right? And I don't know. Yeah. As long as there's an appeal in that, I guess we'll never see the end of these scam coins. It's just not going to happen, is it?
I mean, I can't speak to it. I think on a day like today, I haven't looked at the dominance for Bitcoin, but I know it's huge, right? I see Bitcoin rising faster than everything else. And gradually, whether there's going to be a perpetual churn in altcoins that try to make some claim offering some better service or something different to Bitcoin, or whether we just end up at some point where they gradually all wither away and disappear. I know my take, and again, if I'm just forecasting here, this is again not a certainty, it's my prediction. I do think all of these altcoins will gradually disappear, and we're still very early into this stage. But everything that every one of these altcoins claims to do, or every one of these tokens claims to do, are not good things to do on a chain, on a blockchain, and therefore they're better to be using Bitcoin as the currency behind them, and using other technologies like SQL databases, which are good for them.
What would happen to what would QBTC do in the event that there's another contentious fork?
That's a really good question. I don't know. And there may be something that's specified in the prospectus, but I have no idea. I mean, in theory, one would expect that they would ultimately find some legal way to either fork the fund and say, okay, now you have BTC units and you have BTC fork units, yeah. Or maybe they just sell all the units and create some and use it to buy BTC, and so you have more BTC per unit than you used to, or maybe they sell all the other stuff and pay a dividend out. I don't know what they're legally allowed to do, and I have no idea. But yeah. I think one of those three possibilities would be equitable to their unit holders.
Yeah, I think they can't be under any obligation to honor any and all forks, because anyone can fork Bitcoin at any time if they wish, and they can do it. They can spam fork and do as many as you want. So I think it would have to reach a sort of social threshold where enough people are badgering them about it, like, "Hey, I want my Bitcoin Cash," or whatever fork it is. And that the second part to that question was, and it's all right if you're just sort of estimating, if they start listing, if there's a bug in Bitcoin, or more likely if they decide to list Ethereum or something like that, and there's some sort of awful bug that happens, and it ruins the whole fund, and they suddenly can't honor any of the things they have there. What happens then? Is that what happens?
It's a Bitcoin. There's no bailouts. I think that's if Bitcoin, if their funds were to get hacked and stolen, right? If the custodian was to get hacked and the funds would get stolen, we'd all the unit holders would be shit out of luck. I just don't. There's no guarantee with the Canadian government. This is like any investment in any company, right? And asking what would happen to them if Bitcoin went bad is the same as asking, well, if you were in a car manufacturing company and all the factories burned down and they forgot how to make cars, it'd be the same thing. It would go to zero.
So it's no different from when Quadriga burnt down, and all the people that had funds on that exchange are just waiting to pick up the scraps left after all the legal fees are.
I'd be really careful. I think this thing is built, like Quadriga seems to have been built as a scam from the outset. Yeah. This thing is audited, and they went through 3 years of regulatory approval and appeals, and they had to fight with the courts to get a judge to say that Canadians could hold this. But I think this is like where Quadriga was negative value because you were getting stolen from. This is very legitimate, and it would have to take a very extraordinary event, right? And this would be if you're talking about the funds getting stolen from the custody, well, this is all of these funds are sharing custody, through a handful of specialized custodian companies. In this case, it's the Winklevoss Trust.
Yeah, Gemini,
company,
right?
Gemini, that's the one. And I presume that these people take really good precautions, but these are large honeypots, these custodial addresses, but they do what they can to keep them secure. And we haven't seen one of these custodians hacked, I believe, ever. So far the record is pretty solid, and it shouldn't be too hard.
Yeah, I agree.
The judgment on here, but it's not the same as again, these are the differences between self-custody and your own coins.
Would you encourage everyone that was interested in this but has yet to ever put any money into Bitcoin to first attempt self-custody and to establish how and learn a bit about Bitcoin before they would do this, or not?
Not necessarily. As much as I wish that everybody with self-custody coin and get excited about Bitcoin. I'm a realist, and I've been involved in Bitcoin for coming on 8 years now, and I've spoken to many people about it. And there are many people who simply aren't interested enough or feel technical enough to go to the trouble of self-custody of their own coins. And so there are many people I know who I've talked to who've been interested in Bitcoin for years, but who've done nothing about it because they weren't prepared to overcome that threshold. And some of those people have recently bought units in QBTC. And so I think that different applications suit different people in different circumstances.
Yeah, I now have a horror scenario where enough people are investing in Bitcoin, but in a third-party custodian way, that it becomes a moot point when government passes some sort of, what they're trying to do now with the self-hosted wallets, and this Orwellian term for what we've always just called a wallet, coming out and saying, oh, if you have your own Bitcoin under your own control, you've got to jump through an extra thing. I think that enough people would own Bitcoin through these proxies that they'd be like, oh, something happened to Bitcoin. Oh, I don't know. I put money in it 8 years ago along with my Disney stock and whatever.
I don't think that's going to happen to Bitcoin. I think, but it will happen if people like you and I, and hopefully many of your audience members, don't continue to self-custody coins and continue to act in the term that Michael Saylor described as cyber hornets. If all of the Bitcoin in the world becomes third-party custody, then what you fear could end up happening. But I think at that point, if that were to start happening, people would start to say, well, why am I holding on to Bitcoin? It's not self-sovereign. It's not. Yeah.
But also that would mean that only institutions would be allowed to mine, right? Because when you mine a coin, it doesn't automatically go into a recognized financial institution. It goes to whoever found the block, right? And that will, even if every mining pool was like a regulated institution somewhere on the planet within whatever country, you could still spin up like a miner on your laptop and get lucky and find a block, and no one could stop you from doing that.
Yeah. So, I mean, there's all kinds of forks that would have to happen to actually enforce only allowing regulated bodies to mine and to orphan other things. But I think we're now kind of getting into some really extreme circumstances, which are absolutely worth discussing, but maybe on a different forum than in a different podcast than one where we're talking about how to save a few bucks on tax.
Yeah, I think that's fair. I wanted to ask you, just, it is a little outside the scope of this anyway, but just as a roundup, what's your personal perspective on, without talking about price, but just what do you think is going to happen with Bitcoin over the next year, over the next few years?
Yeah, I try not to make one-year predictions because I think that different events happen. Like, if you asked me last year, a couple of years ago, I thought $20,000 was a very reasonable price for Bitcoin, and today Bitcoin's trading at $32,000, so it blew past. But I got into Bitcoin from a price perspective, in part because I thought, there's only going to be 21 million Bitcoin. There's hundreds of millions of houses in the world. Like a Bitcoin should be worth 10 times what a house is worth eventually, if it's going to be worth anything at all. And I haven't really moved off of that. In fact, I've become more and more persuaded that over some longer period of time, Bitcoin's going, in terms of fiat currency, it's going to infinity. And in terms of its actual purchasing power, it's going to be all the money in the world. So it's going to be somewhere, when we look at today, the value of the US dollar, it's going to be in the tens to hundreds of trillions of dollars worth, not each individual Bitcoin, but all 21 million of them, making each individual one of them worth millions of dollars.
Yeah, I would agree with that. Though my opinion is that when Bitcoin's worth millions of dollars aren't worth anything. So Bitcoin has to be priced in just something at that point.
So just to be clear, I think Bitcoin is going to be worth what millions of dollars are worth today. Right? Not what millions of dollars are worth tomorrow. I think with a Bitcoin, if you have a whole Bitcoin, that would be worth more than a house. That's,
Yeah,
that's
I see an increasing amount of people um, always mentioning and alluding to what Bitcoin's worth in gold now instead of
yeah,
dollars, which
yeah,
that's quite an encouraging thing to see, because
yeah.
that is a much more it's a less of an insulting way to measure it, because the US dollar is just an arbitrary measure of value at this point. It's not it doesn't have any sort of I don't know, in comparison to things like gold and Bitcoin itself,
Mhm.
it's not a reliable. It's like,
Right.
running
Well,
a kilometer, but the kilometer
yeah,
keeps changing every day. Like, it
yeah.
doesn't.
We crossed an interesting threshold today, which was 16 ounces. When we hit just over
A pound or
$30,000,
something, right?
we had what? Yeah, a Bitcoin is now worth a pound of gold, and now it's worth a pound and an ounce because today's been a crazy day in terms of price. But that is
Need a shift, man. I'm sorry,
yeah,
bro.
it's a big milestone, and I don't know what those gold bars, how much those gold bars weigh, but maybe that's kind of like the next threshold. But you can see this thing happening, and there are people you can speak to who get it, and there are people you can speak to who don't get it. And that's just the way it is, right? So in terms of dollars or gold or whatever standard you're trying to use to measure value, um, there are some people who will realize that Bitcoin is a good substitute for that standard of value, and there are some people who, for whatever reason, don't see it.
Yeah.
Maybe they're right in the end. Who knows?
I
Doesn't seem that way.
Well, I'm hoping that more people are going to get involved, and I'm seeing, like, I saw I think it was a CNN headline today, or a CNBC headline, that just said Bitcoin had a great year. It more than tripled in price. And when you see it like that, you start to understand how the next wave of adoption is going to come. It's just slowly people going, "Oh, it's doing well." Like, it's easy to be too zoomed in, like us, when, because recently we were seeing it at $10,000, and then 9,000, and then it's back above 10 again, and then, oh no, it's below it again. Now it's up at 33. It's like, this is insane. Like, why didn't I buy back then? Like, everything I
Yeah,
had, and I'd be stupid to now. But anyone that's sort of been not paying attention and is slowly, I'm told you need to come across something 6 times before it finally penetrates your consciousness. And a lot of people are going to be getting that now, and
yeah,
just going, all right. And to them, it's not going to matter all these times it spent, at 10,000, 9,000, or crashed all the way down to 3,000 during the March 12 dump of last year. Um,
mhm.
yeah. Anyway, thank you so much for coming on and explaining that. And don't be surprised if you get some more questions. And if you do, you want to give a shout out to anything, or a way people can contact you, or anything like that?
I think what I just say is I'm at Tomer Strolight on Twitter, so you can follow me on Twitter. I tweet about Bitcoin all the time. That's the only thing I tweet about. Occasionally,
Yeah.
I'll say something about something else, but that's just my Bitcoin persona. And so you can reach me there and ask me some questions. Don't send me a message that starts with the word hi or hello, because that's what all the scammers do. And so I'll just ignore you if you just say hello and ask me a whole question. Uh, do away with the politeness initially, if you want any kind of
Interesting.
response. I'm not a financial advisor, so I don't give financial advice. I can point you in the direction of people who are authorized to do this stuff. But that's really all I'd say. And thanks for having me on.
Yeah, no problem. I want to reiterate that as well. Like, neither of us are financial advisors. What we really Bitcoin's a technical thing, and what you're experienced in there is, it's technical as well, and just the mechanics of it can be difficult to figure out. It's not the same as advocating, okay, you need to put this amount of dollars into it and you'll see this return. It's just a
Yeah.
technical thing that we want to help people with. And yeah, thank you so much for coming on, and I hope to have you on again, and to discuss some of your other more scientific sci-fi stuff that you have,
Sure.
some of
I'd
those
love to.
theories. Yeah. Well, anyway,
I'd love
great.
to.
Thanks so much for the conversation, Tom.
Yeah.
Yeah.
Thanks for having me. Take
Have a
care.
great day.
Yeah, you too. Bye bye.